previous 30 days held some mixed news for Grab holding stock investors, with some positive sentiments being offset by other negative sentiments. So I'll discuss those latest developments and share with you my updated fair value calculation for this stock and update my rating whether I think it's buy, hold, or sell given these recent developments. So one of the factors moving Grab's share price over the previous 30 days is the company reporting strong revenue growth at $873 million in the third quarter, driven by rideshare and food delivery orders. If you've been following my channel, you'll know that I'm bullish on these industries, rideshare and food delivery, because of the convenience they add. And what I've seen from consumers worldwide is that a willingness to pay for convenience has not been stunted by any factor going forward. It seems like the robustness of that convenience value maintains despite macroeconomic headwinds, geopolitical tensions, etc., etc. People continue to be willing to pay for convenience, and I see that whether I'm evaluating Grab or Uber or Lyft or DoorDash or Amazon or any company offering convenience, consumers have been willing to pay for that. So investor sentiment soured due to the earnings per share being less than expected, even though revenue was better than expected. Furthermore, investors were concerned about this ongoing discussions about a merger with GoTo, which were overshadowed by management concerns affecting competitive dynamics in Southeast Asia. Of course, Southeast Asian economies are growing faster than economies in the United States or in Europe or in other parts of North America, including Mexico and Canada. But investors are concerned about increasing competition in this region, as many of the businesses here are investing to capitalize on that growth, sometimes leading to losses on the bottom line. So that's what has investors concerned over the previous 30 days. Now, I calculated a fair value for Grab Holdings using my proprietary discounted cash flow valuation model, and I found its fair value to be $7.26. The current market price is $5.24, so the stock looks undervalued even after I apply a margin of safety, which I always do, of between 5 and 10%, sometimes more depending on the riskiness and the volatility of the situation. So for Grab Holdings at $7.26, it looks undervalued when measuring by my proprietary DCF model. Click the link below to watch the full video.